All right, we're back again to talk about some fun conversations in real estate, right?
Absolutely.
And today I think we're going to talk about what to do when you're in a high interest rate and high cost market, much like where we're at today, right? Not only just on a national level, but on our local level here in Brevard County, Florida. So both you and I have worked with a lot of clients together and a lot of first-time home buyers, but we're seeing obviously less and less of those with just the market that we're in. So dealing with a high interest rate and high cost market, which we are currently in, the first-time home buyer cannot be having fun in this market. There's probably a lot of trials and tribulations that they're going through. Walk us through kind of the mindset of today's first-time home buyer.
They're very stressed. A
Yeah.
lot of them think that it's impossible for them to buy a home right now, but they just haven't done enough research. They need to talk to a realtor and a lender and find out what's available for them. There are a lot of options I know that you guys have to be creative in a home loan to help a first-time home buyer get into a home. They think they have to have the 20% down. That's not the case anymore. There's 3, 5, 6, what are the numbers on the percents these days?
Yeah, there's low down payment options at 3% for just a standard conventional, but there's a lot of down payment assistance programs out there as well that help people get their foot in the door, that will help with their down payment and closing costs. There's definitely options out there. There's a lot of creative financing solutions that aren't well advertised that can help people get into a home and stop paying rent. The hard part is when you're paying thousands and thousands of dollars in rent, you feel stuck. I would imagine as a first-time home buyer, you're either renting or you feel like you don't qualify. There's not a lot of inventory out there, so what are my options? I feel like if you're a first-time home buyer and you're open-minded to broadening your selection criteria, right? If you have a very small criteria of what you're looking for, you're probably going to have a lot more difficulty in today's market.
Well, a lot of times people get their wants and needs confused. There are certain things that people need. Maybe they need to be in a certain area because they have family there that can help them if they have children, but maybe they want a kitchen with granite countertops. So they kind of have to start weighing out those wants and needs to figure out what is realistic at this stage in the game. And it is painful. I mean, it's very hard sometimes to talk with a new home buyer who is so stressed and they're ready to throw in the towel, but they shouldn't. I mean, there are options there. It may just take us 3 to 6 months to find them a home instead of 3 to 6 weeks. But if they can be patient and work through the process, it can still happen for them. There are homes that are going to come up. There are homes that will work for them. There are different types of loans available out there. We can get credits from the seller for them. There's all sorts of options available. They just can't give up. But the first thing they have to do is call either a realtor or the lender and talk with them and find out first where they are so that we can help them reach their goal.
Yeah, develop a game plan,
Yeah.
Even if it's, like you said, a few months out to be able to find that home, they should start now so that they can get on that pathway to finding the house, going under contract with the least amount of issues, And you kind of touched on it just now, but a lot of people don't realize that outside of the pains that home buyers are going through right now with the higher interest rates and the high costs, there's opportunities that present themselves in those kinds of market, right? You kind of touched on seller concessions. Yeah, I feel like while it's not necessarily a buyer's market per se, there is a lot of leverage that are in the buyer's hands today that didn't exist a year and a half ago. Walk us through how you could help a first-time home buyer who maybe doesn't have a ton of cash to work with, right? And wants as turnkey as possible of a home, doesn't want to fix a lot of things. How would you walk them through some of the negotiating tactics that they have kind of in their hand that present itself today in our market?
So one of the things you can do when you're putting an offer in on a home, let's say you have a buyer who needs $3,000 towards closing cost. You will submit your offer, have an addendum asking for $3,000 towards the closing cost and prepaids from the seller. They could say no. A lot of times they're going to say yes. They're ready to get their home sold. So if you're given a reasonable offer based off of a comparative market analysis, most of the time they're going to say yes. You're not trying to in any way take advantage of the seller by asking them to help you out with these closing costs.
Even furthermore, after you've gone through inspections, I feel like there's negotiating power for the buyer to ask for some repairs to take place, right? I mean, I remember in 2021, 2021, yes, rates were significantly lower, but leverage was in the seller's hand 100%. So I didn't see any requests for repairs because the seller would just flat out say no. And that's not the case right now, right?
No, in those days they could have had 3 or 4 other offers as backups waiting for yours to fall apart. We're not seeing that today. Not that there still aren't multiple offers on some properties, because there are. But after your inspection, you can go back to the seller and say, hey, these are the things that we found wrong. Can I have a credit towards closing cost and prepaid to get these items repaired? And again, a lot of times they're going to tell you yes. Sometimes they may tell you no, but you do have that opportunity after the inspection to go back to the seller and ask for some credits before closing.
Perfect.
So a lot of people think that when we write the as-is contract, that means that the buyers can't come back and ask for repairs after inspection. That is not true. It just means that we're not guaranteeing you any repairs. So the as-is contract just says there's no guarantee that you're going to get repairs. It doesn't mean you can't ask for them.
Okay. And in any case, they're still protected if they're in that 10-day inspection. That's pretty typical, right? At 10
Pretty
days?
typical, 10 days. I mean, we'd always like for 14. If we have this buyer, if you're the seller, you'd always like 10. So, you know.
Yeah, and that 10-day inspection window is the time that buyer and seller can negotiate on any kind of repairs or anything like that, with the buyer protected with their earnest money deposit, correct?
Right. Within your inspection period, your earnest money is always protected. So you just want to be sure that whatever your window for inspection is, that you get your inspection done and communicate back and forth to know whether or not the seller is going to make any repairs. If they're deal killers for you, then pull out. If it's not a deal killer, hopefully you guys can work it out.
Yeah, correct me if I'm wrong, but I feel like home buyers, especially first-time home buyers, should be aware that it seems like there are multiple moments where you can negotiate the seller. Like, first and foremost is when you make your offer, correct? Right? And that's just, what you're offering to go under contract. Then there's a second opportunity to negotiate when inspections are done. If any repairs or anything pops up on the 4-point where you want to, renegotiate your contract. And then also when the appraisal is done.
Yes.
Correct? On my side, we're not seeing a ton of appraisal issues these days, especially if it's priced right. But if the appraisal does come in low, right, that presents another opportunity for the buyer to come back to the seller and say, hey, let's take another look at this thing, right?
Correct. You have all of those opportunities available to you to go back and forth between buyer and seller to make changes.
And all of them, you're protected with your earnest money deposit, essentially, correct?
Yes and no. When it comes to appraisal, you need to make sure that your realtor has included an appraisal contingency.
Yes.
Because the contract, although it has a contingency written into it, is only valid for the amount of the loan.
Your financing contingency.
Your financing contingency. So if you're putting $10,000 down on a $300,000 home and the home only appraises for $290,000, that's the amount of your loan. So you've got $10,000. So you need to make sure that your realtor submits an appraisal contingency to cover that additional amount. Now that's a little cut and dry look. I mean, that's a kind of a easy way to look at it. There's a little bit more that plays into it. You need to look at the letter from the lender to see how much they were able to put down and how the lender has that broken out, because it may be that they're protected that way. They may have just put extra money down, but always make sure your realtor has included an appraisal contingency. It's just one other way to cover you and protect you.
Good point. Very good point.
So John, in this market, as we see our interest rates going up and houses are kind of leveling off, what is your take on this buy now, refinance later? Do you think that's a good idea?
It can be. Again, it all comes down to what's the buyer's game plan, as far as the home. I never want to put a client into a mortgage payment where they are very strapped thin. It makes me very uncomfortable when I see their debt to income ratios at the absolute max.
Yeah.
And I know after having these conversations, I know their lifestyle, I know what their outgoing looks like. If they're gonna be strapped thin to make that mortgage payment, that's the last situation you wanna be in. That being said, we are in a market where we can't predict everything, but there are strong indicators that mortgage interest rates are going to be coming back down. Now, when that happens is up for debate. Chief economists, experts in the field, everything that we're seeing is we're hoping for end of 2023, quarter one of 2024. It just kind of depends. Ultimately, the simplest thing is how how the inflation reports come out. If we can keep on this downward momentum of inflation, then we should see mortgage interest rates follow suit. So you can use that as a strategy, confidently feeling that the chief economists, everything, all the data shows that we will see interest rates lower to a point where you can refinance later. So if your plan in life right now has you wanting to buy a home and you can stomach the higher interest rate right now without being stretched too thin, then yes, I would say strategically it would make sense to get into the home now when prices are where they're at now, as opposed to it could appreciate in the next 10-12 months when rates hopefully come back down, and you could refinance to get your mortgage payment lower. Ideally, we would like to see interest rates coming back down into the 5s, into that 5% range.
That would be great.
That would be a healthy market. People who have this idea that we see interest rates dropping back into the 3s or the 2s, there's just nothing supporting that at this time. And so we probably won't see that again in our lifetime. And so, maybe talk to your lender about what if scenarios. Where's the interest rates today if I do lock and, if I do go under contract on a home? And then, if rates do drop into the 5s, where could my mortgage payment potentially drop to? And if that makes sense to you and it makes sense long term, then I would say, yes, that is a good strategy.
So I also know that for homeowners that already have a low interest rate, but they're wanting to make their payment, let's say, even lower, it's not something that you guys do, but they can contact whoever owns their mortgage and see if they could lump sum an amount. What is that called? I forgot.
It's called a mortgage recast.
Recast.
And it is available on conventional loans. And so, if you wanted to make a lump sum payment towards your principal, you simply contact your mortgage servicer and let them know you'd like to do a mortgage recast. And what's cool about it is, say you want to throw 50 grand into your mortgage and you've got that low interest rate, they will re-amortize it based on the interest rate that you're in, so you don't have to refinance or anything like that. You don't have to touch your mortgage interest rate, and it will lower your payments recalculating based on that lump sum principal.
That's a nice thing for people who they already have a low interest rate, but they still could bring their payments down even further.
Yeah, absolutely. And just touching on, that's another issue in today's market is, the people that they were fortunate enough to lock in the 2s and 3s. A lot of them feel stuck. They might have bought a house that was great for them then, but they've got a growing family and they need to upsize. It's kind of a difficult scenario to be in. But what I've advised a couple of my clients is, if they're able to, they can maybe potentially consider converting their primary residence into a rental property. And although, yes, if they can afford a down payment on the new property, their interest rate might be higher. But if you can, if your mortgage is $2,000 a month at the lower interest rate and you can charge $3,000 a month, then you got $1,000 a month difference that you can factor into the new mortgage payment. Your new mortgage payment might be $4,500, but that $1,000 rental income can offset a little bit of that higher interest rate payment on the new house. So talking to a realtor, talking to a lender about coming up with these creative, out-of-the-box ideas, I think can alleviate some of the pressure and the stress of these people feeling stuck.
Well, and a lot of times too, right now, they may have a 2 to 3% interest rate from, say, 6 years ago. Well, they may have so much equity in the home now that they can sell it and upgrade from there. They just don't really want to get rid of that lower interest rate. So that's where they have to make the decision. Do I want to rent it and make an income, or am I better off selling because I have all this equity and using that as a large down payment on the home that fits me better now?
Yeah, and even more so on that, if they don't want to get rid of that home, they could convert it into a rental and take out a HELOC or an equity line to afford the down payment on the new home. So there's definitely a lot of strategic ways that you can handle it. Just because you're in an interest rate that's in the 2 to 3% range doesn't mean that you're stuck in that house forever.
Right.
There are options that still make sense, and we're still in a healthy economy as far as housing market goes. So it's still going to be a sound investment. It's just talking to the advisors around you that's going to help you guide you down that path in the way that makes the most financial sense.
Absolutely.